In this video, we're going to look at a really popular trading strategy with all sorts of traders for different time frames, and that's trading with the trend. Hello, I'm David Jones from Currency.com, and we thought we'd do a series of videos on trading strategies. And trading with the trend is always a good place to start. It's been an approach that's been popular for many decades in all sorts of markets, whether it's individual stocks, foreign exchange markets, commodities, all of these. So I thought we'd start off today by looking at some of the principles of trading with the trend. We'll start off by looking at, first of all, the theory, the definition of different types of trends. Then we'll jump on the Currency.com platform and have a look at some real markets to see how this plays out. So let's get started. Let's take a look at some of the theory behind the idea of market trends. Let's take a look at some of the theory behind trends, then we'll look at some real world examples. So the definition of an uptrend is a succession of higher highs, higher lows. This is where really the buyers are in control of the market and continue to push it upwards. Any weakness is seen as a buying opportunity. A downtrend is really the mirror image of that. A market's falling, we have continued lower highs, lower lows. Every time the market rallies, it just meets more selling. So it's the sellers in control of this market. And traders will use trend lines to help follow these trends, to try and identify where to get in on the trend, and also for signs that maybe the trend is changing, because of course trends don't go on forever. But let's get on the platform now and look at some examples of these. So we are logged into the Currency.com platform. The market I'm going to take a look at first of all is the price of gold. So I go into my favorites. I've got it saved from before. I'm going to choose gold spot. You can see the chart down here. Let's just maximize this chart to take a look at the trend. So the period I'm looking at here is from around about the beginning of March through to the 21st of March. So we're looking at 3 weeks, and each of these candlesticks represents an hour's worth of trading. I think we do have an uptrend going on. We've got higher highs and we've got higher lows. Let's just pick up on that and draw a trend line by accessing the drawing tools up here. So we'll click down, and what I want is trend. So I'll pick on that and draw the trend on the chart. So there's our trend line. So the assumption is we've seen the market move higher, sell off, move higher again. When it sells off towards this trend line, so towards the 1300 area, we're expecting the buyers to come back in. So I may want to be a buyer here of gold around about 1307, assuming the trend's going to continue. And it's only if it starts falling below these old lows and that trend line does it start to look as if this trend is in trouble. Let's jump forward a bit and see what happens next. So I've jumped forward about 6 days, and you can see here that was the move back to the trend line. The buyers came back in and pushed the price out yet again to a fresh high. So that trend has continued. So this is the simple principle of trading with the trend. Weakness back towards the trend line, back towards the previous lows, would be viewed as a buying opportunity within this trend. Let's take a look at another trend. So for the example of a downtrend, I thought we'd take a look at the popular tech stock Apple. So here we go. This is a daily chart now. So each of these candlesticks is representing a day's worth of trading. And we're looking at the period from October through to early December 2018. We've got lower highs and lower lows. The price of Apple is trending down. So again, let's put our trend line on. So there's our trend line in Apple, currently coming in around about the 180 mark. So the assumption is if Apple was to rally up towards $180, $184 a share, that downtrend will resume and the share price of Apple will slip lower. Let's jump forwards and see what happens next. So for the rest of December, that trend does continue. This is where we were looking at it before. The market sells off, tries to push through the trend line, but really struggles and eventually slips as low as about 146 a share towards the end of December. Of course, trends don't stay intact forever. Let's take a bigger look at Apple and see what happens with this trend. So in early 2019, we do see some strength starting to come back into the Apple share price, and it's starting to break out of this trend and establish a new trend. So we're seeing here the situation where the trend has reversed. And this is, of course, another trading strategy that we'll cover in another video. But you'll see how trading with the trend, why it's such a popular approach with traders over all sorts of different time frames, because they do persist, and when it breaks out of the trend line, that can be the first warning that sentiment could well be changing. So you can see we do have trends in markets, uptrends, downtrends, over all sorts of different time frames, and many traders will try to identify these trends and ride them for as long as they continue, and they don't carry on forever. As we saw in that example of Apple, trend lines do break, and it can mean a new trend is starting. We'll start wrapping things up there, but if you have any questions or comments, please leave us a message in the comments down below. We do read them all. To never miss out on the content that we produce to our channel, we'll be looking at different strategies as well. Just make sure you're subscribed by clicking the subscribe button, and if you click the alarm bell notification, you'll get a message every time we upload new content. And of course, to find out more about the company, just go to the website Currency.com. But we'll wrap things up there. So from me, David Jones, and Currency.com, good luck with your trading.